The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Monday, the 8th of August. My pleasure to be here, and we're looking at a Dow that's down 9 at 18,533. Let me move this away just for a second. Right there, okay. We've got the S&P down 1 at 2,181. You've got the comp index, which is trading at this particular point, down 11 at 5,209. This is very interesting. You've got the VIX at 1162, up about 23 cents. Below the teens, it's really important. Spend a whole chunk of time over the weekend, sent out to my subscribers a lot of information, a lot of it discussing the VIX, a lot of it discussing the market, etc. Plus working on plans for a webinar that'll suggest that the leg D in the Dow is still to come above 18,622, and that there will be higher highs even after that. And even if we get those leg Ds and peak Ds, leg Ds and E's in the weekly charts that turn around and make peaks. So you've got the Great Britain's up about 9 at 68.02. DAX is up. What's important is that gold is down 3 at 13.41, which is giving just a little bit of a boost to the dollar. The dollar is up 23 cents, I think it is. Yep, 96.37. And we've got another kind of rotation going on. Crude oil is at 42.95. It's up $1.14. So it had a very sharp pullback. It's in a bounce mode right now. The bonds are unchanged at 171 and 17/30 seconds. And I think that it's worth just starting the week going through some of these charts. You see in this E-mini chart, we're in legs F/A. I hate that. F is is potentially, you're about to come down very sharply. A is, you can come down a little bit, but you're going to much higher highs. So that's nebulous for me. It doesn't say anything. But what does say something is, let me just do this for a moment. We got that pullback in the 10-minute E-mini chart, went to a peak D at about 5 o'clock this morning, turns around, comes all the way back down, and it goes from the high of 21.83 to a low of 21.75. Round number high, round number low. Nice little bounce occurring right now. So I just wanted to show that the parameters to watch below 21.75, you can expect a longer timeout, holding really nicely above 21.7750. In fact, going towards the 21.80 level now says, okay, go look at your 120-minute chart in the Dow. We'll do that right now. 11 o'clock. So this is a 2-hour chart. We'd expect at 11:31, you will start to see that there is a peak formed in the Dow 120-minute chart with 18,569.31, the high. And it doesn't matter as long as we're underneath 18,569.30. This will be a leg D that went to a peak D. My thinking is that there will be a leg D in the Dow. So now I need to go through this, meaning that the support today is at 18,500. We're at 18,538. So it's 18,500 to about 18,470s. I don't think there'll be a deeper pullback than that. Why? Because this is leg C right here in the 120-minute chart. But let me do this. I want to go to the daily chart, do a little bit of itsy bitsy more micromanaging the trade type thing. The daily chart closed on Friday with a fabulous move up. Great candle at 18,543. In this kind of power move, what happens sometimes is when it takes off, If there isn't a powerful follow through immediately the next day, almost like a gap up follow through, then you can expect either a doji candle like we're seeing right now, or a little bit of a pullback. But what you need to see, if this is really a buy mode that's starting rather than a buy mode that's ending, you want to see a powerful move tomorrow. Now, what are we looking for? We're only looking for 1 penny above 18,622.01. You go to 0.02, you started leg D. There are things that I need to be considering within the Chapman wave, and that's why this is such an important period. In the webinar that I'm working on, I talk about this being possibly one of the most important webinars that I've given in a very long time, perhaps as important as the one last year in February, where I said I'm expecting that there will be a leg 3 to the upside that concludes in the Dow, and that's Elliott wave, and then a sharp wave 4 to the downside, which is what we got based on the Chapman wave methodology as well. And now we've broken to all-time highs, which says to me in the monthly chart, let me just get rid of all this now so we can go apples to apples. In the monthly chart of the Dow, the moment that the Dow went 1 penny above 18,351.36, it started a new leg C to the upside in the monthly, and that suggests very strongly that there should still be a leg D to come. In the Chapman wave methodology, that's what we anticipate. What is it for those of you who are perhaps new to my work? What does it mean? It means simply that within the context of looking at higher highs and higher lows, if I can just get this quickly, if you get this kind of pattern, and I decided a little while back that I'm going to start showing the pattern a lot more because it just makes it so clear, especially if you're new to my Chapman wave methodology. It means identify the lowest low bar, start a wave count to the upside, use alphabetical letters all the way to G, but it's the 4th highest peak D, that says to you, this is where other things can happen. They don't have to happen, but this is where you've got to be prepared. This is where the yellow light flashes and says, you don't have to change your trade. If you are long, you could take a little bit of a profit from that, keep your core position if possible, and then wait for 3 things to happen. One is there's a little bit of a pullback, and then within 3 bars, it breaks to the upside. That starts what I call a parallel wave count, E/A. Or it might be so clear that it's E that you don't even have to put the A, or it might be so clear that it's A that you say, I'm expecting, what's fantastic about this, 4 new buy modes, 4 new peaks in a new buy mode. All right, let's just do one thing at a time. A sharper pullback says, oops, be careful. You could take time, maybe not price, and if it pulls back, takes time, and then starts another move to the upside, you might get a new buy mode, but if it fails, and the technicals start to fail, technicals, I mean the MACD, the stochastic, and the 9-period moving average, you better be careful. And I'll show you a number of charts in a moment that are right there in the weekly charts and many of them in the daily. Now, what's even more important is that the third thing is that within the context, you've got a potential restart. That's an instance restart. Within 3 bars, you break above D. But if there is a powerful move in leg E, that E can sometimes be so clear that it is not the end of a move, that it's really the beginning of a move, that becomes a powerful medium which to do your diagnosis. I'll be right back. Basil Chapman. Dow's down 19, S&P's down 1.5. This is the Tiger Technicians Hour. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. I had a couple of questions during the break, and I will try to get to them. Let me do this because this is such a... Why do I call this one of the most important periods that I've been in the market for a really long time? And why is it one of those most important periods? Because I've talked about a coda phase. A coda phase to me is like, I always talk about Beethoven. If you know anything about Beethoven, there's this piece that beautiful piece goes through all these different variations, different moods, different textures, different complexities, and it goes on a little bit. These pieces tend to go on a little bit, and then you think, okay, this is the end of this is the last movement, fourth movement. It should end now, and he goes diddle-a-little-lum, and you think it's going to go bum bum bum. And you think, okay, that's just about it. Okay, I got to go check my meter and all that. And he goes, and all of a sudden he goes into another thing. You say, oh my God. Oh. I mean, I love Beethoven, but yeah, I've only got so much patience. And then as you're about to give up, he goes, bum bum. That's the coda. You remember in for those of you in 2008, we looked at the summer sell-off. And I said, I don't know, my work just hasn't yet got that leg. I can't remember offhand what it was. In the weekly charts, I think we're going to go higher. And then we went higher. And then we went to what I call, that was the coda phase. And it went on longer than people would think. And then we turned around, and that was it. Well, this is the same coda that I'm looking at is not a coda in price. That's something we're going to look at in depth. We're going to deal with in many different ways. This is a coda in the aspect of capitalism and how it might come to not a conclusion. It will never come to a conclusion. I hope it never comes to a conclusion. But how we've seen a systemic change that's been going on in the in the structure, the internal structure of capitalism, the philosophy of capitalism, and the actual implementation of capitalism. And because of it, all the things that I look at, and these are the icons of skyscrapers. I featured another one for my subscribers over the weekend, one that I was looking for, but I had no idea what it would be. This is where you recognize it when you see it. And when people say, what icon will be the final icon? In my mind, I know what I'm looking for, but it just could turn out to be something that comes out of the blue. Like, I mean, who knew that there would be, after the Burj, the Dubai, they call it the Burj Khalifa. After that, who would have thought that they would try to build a mile-high building, almost a mile high? So you just don't know where it's going to come from. So this is why I'm saying that this quarter right now that we're in is a deflection point for me. And I'm not talking about the market. I'm talking about in all the icons that I look for, the socio-political, economic, just all those icons, fads, whether it's smoking from the 1920s with drinking, with the liberation where women started to drive cars and felt free. They could go on bicycles. They were smoking and drinking. You can read stories about it. I'll think of his name in a moment. It's just slipped my mind. I can actually see his name. He used to write these articles. He was I think a New York Times. Anyway, he was a reporter at the time. No, it was a different newspaper completely. And he kept writing about these things, and that's what's going on now. Okay, in a different form, but it's the same. Remember, I spoke about Coalport in 1934. Anything goes. We're in the anything goes phase. That was 1934, 4 years after the top, but that's not the point. The point is the rotation through different spheres, through different growth and inventions, and then the development of those inventions, like the electricity in the automobile, the airlines, that as they cross the century level, and what happens after that. All right. I wanted to get into that only to tell you that this is a very important phase for me. Market-wise, it's real simple. I am anticipating that we're going to get 18,623 in the Dow. We're 100 points away right now, and I think that that's going to happen the next maybe 2 days. The reason why I want you to bring up that 120-minute chart, whoops, where did it go? Right there, is that we need to see a consolidation for a peak C. It could happen in the next 2 hours, or it could happen later, or even tomorrow. It doesn't matter. But I'm expecting that we will get a peak C, and then the leg D will be quite strong. It'll be a surprise, and it'll move to the upside. The whole thing aborts. The Dow's at 18,523. Now the whole thing aborts if, in fact, we have a sudden cascade towards 18,350s in the next 2 days. I don't think it's going to happen, but this is the market. Anything can happen. All right, now let's get back to our nitty-gritties. See, we've made a peak D in the weekly chart, but the characteristic of last week's candle is just not a candle. It's a candle in the Chapman wave methodology I showed my subscribers. This is the candle that has that what I call the falling axe, lower lows, lower highs, making an expanding wedge to the downside. If we break out decisively here, there's a possibility of a one-to-one could take us to the 18,750s. That starts to change things a little bit. And that extends the monthly chart in leg C. But let's go through the different indexes. SPX.X, the S&P. You see, this is so far the move down has been abated from early this morning because the S&P did squeak to a new all-time high, 2182.87 last week, 2185.45 today. But here's the big issue. You made a peak D, you had a sharp pullback from peak D, a single leg down. The MACD stochastic were terrible, and they've improved only a little bit, and we've gone to, I have to call this a leg E. I'm not going to call it an E/A officially, but I'll just put down for those of you who study the Chapman wave methodology, we've got to think of it as an E, possibly a new A. Wow, a new A says that we go all the way into next week making higher highs. Doesn't tell you how high, it just says higher highs. Okay. So this is the way we're looking at it. We've got the QQQs. You know the QQQs, 1, 2, 3. The QQQ went to a leg E, possibly making a peak E here, but the MACD is still strong, turning down a little bit, but still strong. Stochastics starting to fail, but wait a minute, failed, it's at 87%. That's good. So that makes us very important. So to put it all into perspective, let's go to the semis and the IBB, which is the biotechs, because those are really the big movers in the sector department. And you've got the IBB pulling back from a peak E, almost went short today. And then I thought, the MACD and stochastic are still strong enough that this could be a sideways consolidation with a sudden spike. And what the heck do I call this new leg? Is this new leg A or is it old leg E? It didn't take out the low of 240 back that was made back in February, and it didn't take it in the move down in July. So this could be the same buy mode. It's unlikely, but that might be. Otherwise, you've got yourself a second arch formation. So it's very important. I'll give you the numbers. The IBB closes under 287. It's going to be a quick trip to 285, the 200-period moving average, and then even lower. If the IBB manages to kind of consolidate today, and by tomorrow, the next day, tries to get to 298, that says, hey, wait a minute, it could recycle and go even higher. The 303, 305 would be the support. We'll look at the SMHs as soon as I get back. Basil Chapman, Tiger Technicians Hour. Be right back. Hold on. A lot to come.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Dow's down 17, S&P down $1.21, holding really nicely off the big move we had Friday. couple of things I want to talk about. One of the reasons why we've been long and we're staying long and along the Dow, along a lot of other things, added a couple of positions, trying to add one position just for a short-term bounce to give it to be in that position, in that sector, because it appears that it has the potential to go even higher and be a leader for the next quarter. I don't know. So this is our positions right now, but I have a position that we're ready to put on if the market does certain things today or tomorrow or the next day. So it reverses, that is. So NLY, question, Annalie, capital management, monthly chart had a whopping pullback from the 18 area down to the 8s and is now at 11.10 in leg A. All it needs is one. Whoa. It doesn't need anything. 11.13 and 11.14. Today just started leg B. A couple of things have just done that by 1 penny. Leg B has just started in the monthly chart. Leg D, I guess, has started in the weekly chart. The question is, should I hold on? Well, there was a question from Peaky in the Den. And I'm going to suggest that, yes, you do hold on. Two things are going on that you just need to be aware of. That in the wave count, I have almost the same thing as many of the others, except that this cup formation is more like a bowl formation, a successful M-shaped pattern. And I'll just do this real quickly. It's NLY is shading at 11.11. And I just want to quickly put in my Chapman wave notation. I should always check to see if I picked the lowest low bar, because if you don't, you've just wasted time putting in notation that you now have to erase. So let me just do this. Yeah, that's good. Okay. So yes, it made a peak A, B, C, D, and it went from the 10s all the way to the 11.10 area back in May, pulls back, comes back down to the 10.50s, rallies up to peak A, B, C, pulls back, holds nicely, and then it goes to a D, and now we're in leg E. Same as the general market, same as the SPY, same as many of the other areas. So what I'm thinking here is, yes, I think that is a participant. I think it's acting well. I would like to see in the next 2 days that it pushes over 11.20, probably gets into the 11.30s. That'll be really good action, number one. Number two is the MACD and stochastic and the daily are still very strong. The weekly is at 81%, and that's good. And the MACD has bounced, making the M formation, and the monthly has been improving. I like what I'm seeing, but you've got to have a little patience. So this is what I'm going to say. You got in much earlier. So the thing to watch is $11 and, about 5 cents maybe, down to $10.90 is good, 93 cents is very good support. Give it another, I would give it 3-4 days. But the worst case that I'm looking at is that it makes a D and it takes a week and a half, and all it's going to do is trade, because it seems to be an area of support, intermediate term, in the weekly chart with 1060. I don't mean right now. I mean the area of support is 1060, 1057 area. And I'm going to suggest that if you have patience, you don't have to do anything. Yes, if you wanted to take a little bit off at 11.10 and then maybe put it back at 11.88, fine. I don't think it's going to make that much difference, because this is a stock that if it actually does pick up strength, and instead of breaking down, closing under 10 in the month of August, it actually pushes up and goes to 11.45 or higher, you're looking at something that has the potential to really build pressure and to go to the upside target of 11.95, which is the high of August of a year ago. And that to me is the cup formation that I'd be looking for. So I'm going to recommend, so I wouldn't even want to say take a little bit off to put back for the 20 cents or something. You might miss putting it back if it does move high. That's the way it looks right now. So all I'm saying is I like it. It's holding well. Do expect that if the market turns down in the next few days, because the Dow makes its leg D and then has a sharp pullback, this will probably participate, but I think it's going to hold very well. Thank you. Let's do a couple of other things now. I don't know if Bob's listening. He just sent me an email. Bob, about your CLR calls that you have, Continental Resources. The reason why I thought, great, what an opportune moment to talk about this. Look at, this is an example, just an absolutely perfect example of how arch formations are formed. Look at the pattern in CLR, trading at 46.89. This is Continental Resources. You couldn't even imagine this. If you were on a computer, you could probably do this. I mean, if you were writing the software, But in real life, can you imagine to get such a perfect rounding top? Now, what's the thing that would spoil this beautiful rounding top? At 46.89 in leg E, I haven't even put in the alternative wave count for a couple of reasons. It's because if it spikes to 48.5, 50 in the next week, this pattern completely changes. And that's why when you see a pattern like this, you always have to look to the left side and say, wait a minute, where could it possibly be going? Well, look, the left side doji high that was back on the 1st of May at 53.58. It's like a lighthouse, like a beacon. It's just calling and saying, come to me, come to me. It doesn't have to do it right now, but the MACD is still good. It could deflect higher, it could close lower, but this is a great candle for the day. And the stochastic still at 84%, making lower highs and lower lows as we're moving along. But at 84%, it's still strong. And the unbalanced volume, the blue line, is still improving. So here you are, Bob. I think wonderful that you got your calls. I'm saying hold on to those calls. You can do one of two things right now. Either you could have a subdivided strategy, and I know that sometimes you do that, and that is to take profits right now because you've got some really good quick profits, and then keep the rest. Say if you take a third off, keep 2/3, or 1/3 off, 1/3 you take off. If there's another spike in the other third, you say, hey, it's the money's house, I'm going to play with it. Okay, that's all of part one. Part two is, I love what's going on, but you do have calls. You have an option calls can shrink in no time whatsoever. But the way it is acting in a weekly chart, it means I have no choice but to go to the daily and say, what's happening in the daily? Well, the daily chart, of course, it's not going to be easy because you've made a rounding top. The daily chart is just powered high. I've got to identify, is this A, B, C, D? Or is this now just a brand new A, B? So always, you have no choice in the Chapman wave. I'll do it real quickly. Is to go back to the lowest low. I'm not going to do it now. There's a break coming up soon. I'll do it during the break. Bob, I'll be back. I'm just saying, hold your calls. But if you want, do the first strategy. The second strategy basically is going to say, keep your core position and have patience because you've got calls. You can wait a day or two. If it wiggles around, it's still very strong action. And try to hold the whole thing until it can hit strike price of 50. And then you want to exit at least half. That was going to be the other, but I need to do the wave count. So, Bob, if you're listening, I'll do that when I get back. Meantime, back at the ranch, I had a question about BAC, Bank of America. Bank of America is in E. Now, I'm calling it E. I could give an alternate count, but the characteristic of the MACD and stochastic, in this case, say, hey, this has met all the targets that we were looking for. Was a test of the high of April the 29th, 15.30. Today's high is 15.17. It hasn't quite made it, but this is something to watch, and I'll do the XLF when we get back. Basil Chapman, Tiger Technicians Hour. I'll be right back with the Dow down 12 and the S&P down only 53 cents. Now, here's the 10-minute as we go out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, we're back, and that's a failure. Yep. So I'm looking at the HO. This is the heating oil continuous contract. I had a question about it. So the question is, what's the question? Question is CL and the ULSD ultra low sulfur diesel wave count. All right, well, I've got the HO contract right here. This is the continuous contract. This is a leg A in the daily. That's a little different, I think, too. Let me just check this here. 1 second, crude oil. I think that's in B. Nope, that's also in A. Okay, so crude oil is in leg A at 42.89, up $1.09. The weekly chart made a peak D, pulled back sharply, held the support that I kept talking about as pretty important, and then it rallied last week on Thursday, Friday. Today it's following through, good action. What I'm looking at here is that in my work, to be able to say that crude oil has made a meaningful low, would have to see crude oil go to the 46.50s, and it needs to do that quite quickly within a couple of days and hold very nicely. That's number one. Number two is if a crude oil pulls back sharply and breaks under 40, then that 39.18 low is going to be tested. And if it breaks, that's just really not good. So heating oil now is a different animal because we're talking about a different category within the oils, right? This is the heating oil. It's got nothing to do with your crude that you drive with. But the pattern's the same. And all I'm going to say is, yes, it's a nice bounce. I'm treating it as a bounce right now. At 1.339, it's got a 1.34. What's really needed is it needs to go to 1.3510, into the 135s, $1.35, and that to me says, okay, and it needs to hold all week. It cannot pull back during the week to 1.30 and break that. It just has to move. It has to move towards the 1.38 area, which is the 9-period exponential moving average in the weekly. It's going to take a lot. The technicals, everything's in place. The price is moving. I'm just saying I'd actually like to see a peak A in the next 2 days, meaning you make it a top and you pull back, and then a leg B begin to start by Thursday or Friday. To me, that's I want follow through upside action, not a single leg. Okay, hope that helps you. So that was for Julie. Next question was DXY, dollar DXY. So the dollar is very important. It's holding very nicely now. It's up about 23 cents. This is the move that we're talking about. in the crude oil, you see the way that you've moved up in leg A, you've pulled back and you're holding well. So if by tomorrow, let's say today we don't break above Friday's high of 96.52 in the continuous contract, but we do it tomorrow, and tomorrow is not only really good action, gold actually pulls back a little bit deeper and the dollar takes the lead. If the dollar can get to 96.80s within the next 2 days, I'm going to say, you know what? I think the dollar finally can make that leg D in the weekly chart all the way up at 97.57. Make it real simple. A close in the dollar below 95.50 this week is just negative action. A close above 96.70, try to touch 96.80 will be really good action for the dollar. And that really improves that monthly chart. And that's another reason why I think that the market has a chance to make new highs. All right. A question is, another question here in the Dan Frank from Gloucester, Mass. Oh, we went to Gloucester, Mass. There's that statue. There's that little island. Is that Marblehead or Gloucester? Oh, yeah, two statues. One statue is in Gloucester where they've got that little park that's really pretty. Not in Gloucester, in Marblehead. And then Gloucester, up north coast of up above Boston, what, 18, 20, 22 miles or something. Gloucester, which is on the way to Rockport, really pretty little place. And then we didn't eat this year, but we ate last year at the little place right opposite the statue, the memorial. And there's that little, like a dino or something. They have fabulous fish. I liked it. All right, Frank, I've got tea. The question is dividend stock. Fisherman's statue. I said fisherman's statue. So we've been long since December at 34.19. It's at 42.88. It's hit 43.89 peak D. It's in the rectangle consolidation. There are two patterns that are forming. Either it's making the arch pattern within the rectangle, which says, whoops, if it takes out 42 support, it's going to go really quickly to just 41.70. Or by Thursday, give it a few days, by Thursday morning, not the afternoon, by the morning, it has to be trading above, I'd say above 43.25. If it's doing that, it's going to go to a leg D. And in this rectangle wave pattern, in the Chapman wave, a leg D forms, no. If you go to a peak D, E, or F, and you make this flagpole pattern, you go straight up and you come back down really sharply within 2-3 bars, and then you start a very gentle move to the upside. It's what I term a Chapman wave buy mode, an inside buy mode, and it says the shorter term, in this case the 120, should in fact get to a peak D. It hasn't done that. It went to a C, but it didn't get to a D. It's also pulling back. Yeah, of course it's pulling back because the daily is. But what's very important is there should be a rally that takes you just under, exactly on, or just over the previous high. In that case, it's between $43.60 and $44. That would be my upside target. But that's the upside target if in the next few days it turns around and it tries to get into that 43 high 20s. That'll be very important. If it starts to say even today or tomorrow, it goes under 42.77, I'd say, whoa, just chop, chop, chop. So I've had to make a big decision about this because we've had fantastic gains. We've had the dividends in each quarter. Do we keep holding it? Is this time that it could start to pull back really sharply? And I'm looking at it and I'm saying, no, I think this is a leg C in the monthly chart. It could be a peak C as all of August is a congestion, kind of a, maybe it doesn't make that inside buy mode. It just keeps pulling back, but within a range. And I'm suspecting that in the month of August, 41.70s would be key support. I got to make decisions then about whether to lighten up again or just to keep the position we have. I don't know. Now, your question is, the reason why I'm going through this whole rigmarole here is because I'm trying to position myself to say to you, we've already had the spectacular move. So I'm going to say, Frank, have a little patience. If you can have patience and see what happens in the next 2 weeks, you've kind of missed it if it goes above 44. You have to wait. But if it just starts to gently pull back and it gets to the 42 level and still not breaking down, and then suddenly hits 41.70 and then starts to rally, in that area, I'd say to you, that's the next time that you could start. But you have to start with a small position because that's a spectacular move, because all it has to do for leg D is consolidate in August. It's going to have a narrow range, and then it just has to pop up 1 penny above 43.90, and it's in leg D, an all-time high in AT&T. Sorry, did I even mention we're talking about AT&T? AT&T trading at 42.87, down 29 cents. But this series of U-shaped patterns says that at some point it could break out and it could become a leader to the upside. I'm saying should, and I just don't have the evidence yet to say that it will, except that the monthly chart technicals are really strong, and I suspect fund managers have been buying these communication stocks, telecommunications, because they offer some safety factor with the yield, but they also have been acting well, and they're in the right area. I must tell you that the bills just keep going higher with Verizon and AT&T, Comcast, the whole sector of communications still working. So you're gonna have to have patience right now. So that's for Frank in Gloucester. I'll be back and we'll talk about the EEM in a moment. Basil Chapman, Tiger Technicians. Oh, I didn't show that. Now don't tell me I lost the opportunity again. There's the 10-minute chart.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi folks, just got a short while, so let me do a couple of things here. I promised I would look at Bob's CLR, Continental Resources, trading at 46.67. I believe this is a brand new leg B to the upside in the daily chart. That suggests it should still go to a C and a D. That's why I was discussing it before, based on the weekly chart, to say I'm calling it an E, but everything about it is still very strong. I know this pattern very well, and this pattern is no JFK. Well, I just thought I'd say that. In this particular instance, these arch formations invariably start to stall as the technicals stall. And in this case, the technicals, I wouldn't say they're stalling. The MACD is just close to deflecting higher. So yes, I'm going to go with that second one that says, if you're able to, it's actually pulled back a little bit from where it was, so that you would have been able to get even better price for your calls. But I'm thinking, while I was doing this, I was thinking of your usual strategy. And your usual strategy, if I recall correctly, was to take something off, at least to reward yourself for that first initial really big response to being correct. So I think that's what I'm going to say. Take a little bit off. I would try to keep a core. And in fact, I would try to put some back if it goes under 46, because that's a strike price that it's already gone to. I don't know if there is a 47.50 strike price, but if it pulls back to 46 and holds for 2 days, you're going to have to give it 2 full days. If it does that and holds on the second day, it actually closes the second day towards the high. And that's a position where I would put back that the option I took off. Anyway, congratulations. Nice move up. This leg E can go higher because B could go to a C to a D, and it's still an E if it happens within 2 weeks. All right. Hope that helps you. Now, the couple of things that we got. EM, a couple of questions in the den. I'll get to those. EEM, just 2 E's, not 3. EM right now is trading at 36.89. It's active. I spoke about this a little earlier. I think it was maybe 2 weeks. No, I think it was 3 weeks ago. I had a question about EEM, and I said, yes, it's now improving. It is acting quite well. So this is going to be DE, a new A, B, C, D, took out the low. No, it didn't. This is an E slash, it's the same as everything we're looking at. It's an E probably slash A. I'm just going to say on a very short-term basis, you've got to give the next 2 days its due. You've got to see, is the Dow going to make that new all-time high? And if it does, what happens immediately afterwards? And all I can say, you've got an E in the weekly chart. Maybe tomorrow I'll have time. I'll go through some of these weekly charts and we'll look at them. E slash A in the weekly chart, actually, because the technicals are really good. What would I do with the EM? If you aren't long yet, you just have to wait. It's a 36.88 up 26 cents. You just got to wait for a pullback into either the low 36s. I wouldn't like to see it go lower than 35.90, but between 36.20 and 36, I would just start a little position. But you'll know, because the next 2 days we'll be talking a lot about what to expect in the market itself. Question about USO. Yeah, I did the USO in terms of the crude oil. USO is the same. This is in leg B. And the question should be, has the USO enough legs to start a move in the Chapman wave towards a leg D? It's in leg B. And I'm just going to say to you, I like the action. If the USO at 10.12, United States Oil Fund can up 26 cents. If any pullback in the next 2 days, today's Monday, by Wednesday 4 o'clock into Thursday 10 o'clock in the morning Eastern time, if the USO is not closed, or I just put it this way, if it's not broken below $9.80, but instead it has tested, it doesn't have to be there, but it has tested 10.22 to 10.31, that's a really big thing. And that says, yes, this could be a bounce that has some legs. In the daily, the weekly, I have to wait for the stochastics to start moving above 20%. It's right at 20% right now. So it's a start. And it's really, the whole thing depends on that monthly chart. It's got that H pattern. It's got to break. I mean, you're going to see the USO over 1150 to really have comfort in this. Okay, and the next question was FANG. Let's look at Facebook, if you don't mind, as we're about to go out for Jay in the Den. Yeah, it's just holding now. It's gone to an all-time high. I think FANG we'll have time. Tomorrow we'll talk about it. Just remind me. Hey, thanks for being here. Check out my opening call. It has some really nice positions.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,